You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Hey everyone, let's talk about Netflix, which has just made headlines with its latest stock move. The streaming giant has announced a 10-for-1 stock split, making its shares far more accessible to both employees and individual investors. For those who aren't familiar, a stock split doesn't change the value of your investment. It just increases the number of shares while lowering the price per share. So if you owned 1 share before, after the split you'll own 10, each worth a tenth of the pre-split price. The market capitalization remains the same, and Netflix's fundamentals are unchanged. But it's a move that usually signals confidence from management about future growth. Netflix's journey has been remarkable. The company launched in 1998, initially renting DVDs, went public in 2002, and the real game changer came in 2007 with the launch of streaming services. By 2016, Netflix expanded its streaming service to 130 countries, solidifying itself as a global entertainment powerhouse. In the past decade alone, its stock price has surged over 900%. And now, with this 10-for-1 split, the shares will trade at roughly 1/10 of their previous price, starting November 17th. The timing of this split coincides with a phenomenal year for Netflix. The company has been riding high on content successes, including original hits like K-pop Demon Hunters, which became the most popular film ever on the platform, with over 325 million views. Even live sports made waves. Its broadcast of the Terence Crawford vs. Canelo Alvarez boxing match drew more than 41 million viewers, making it one of the century's most watched men's championship fights. Revenue growth has been solid too, with the latest quarter showing a 17% increase, an 8% rise in net income, and a 21% surge in free cash flow. Netflix isn't stopping at streaming movies and shows. The company is expanding into live events, gaming, and advertising. Major live events, like the 2026 World Baseball Classic in Japan and the FIFA Women's World Cup in 2027 and 2031, are on the agenda. Plus, upcoming interactive TV party games could create new ad revenue opportunities. Analysts are bullish on Netflix, projecting earnings growth of around 25 to 27% in 2026, with some price targets as high as $1.600 per share, a potential upside of over 40% from current levels. In short, Netflix's stock split is more than just a cosmetic change. It reflects the company's confidence in its continued growth. Whether you're an existing shareholder or thinking about joining in, the streaming giant's combination of original content, expanding live offerings, and advertising monetization makes it a stock to watch closely as we head into 2026. Netflix has already delivered historic gains, soaring over 95,000% since its IPO, and the future looks just as promising. Stay subscribed for more videos.